Okay, so Trump backed off his 145% tariff on imports from China, and I want to talk about why. Because the headlines barely scratch the surface of how bad this really got behind the scenes. A few days ago, the Trump administration dropped this absolute bombshell, a 145% tariff on Chinese imports. That's not a typo, 145%. And we're not talking about niche products. This hits everything from electronics to key components that power American manufacturing and daily life. Smartphones, semiconductors, computers, the stuff we all rely on. From day one, it was clear this wasn't going to go over well. The stock market took a hit almost immediately. Tech stocks were the first to get punched in the gut. Apple, Nvidia, Intel, all of them. But the administration didn't flinch. They seemed fine with that level of damage, as if losing trillions in market value was just the price of being tough on China. But then the bond market reacted, and that's when everything changed. Most people don't track bonds day to day, but they should, especially now. The US is carrying about $30 trillion in national debt, nearly 100% of our GDP. That debt is financed through government bonds. That's how we pay for defense, Social Security, even subsidies for farmers hurt by tariffs. So when interest rates on those bonds go up, even by just 1%, that's an extra $300 billion a year in interest payments. That's not theoretical, that's real money. We either raise taxes, cut spending, or just add more debt. None of those are good options. And here's where it got really dangerous. Global investors started looking at US bonds and going, maybe this isn't the safe bet it used to be. So they moved to German bonds instead. That's a major red flag. That's the US losing its gold star reputation in the global financial system. If US debt stops being seen as the safest, most reliable asset in the world, borrowing gets more expensive, inflation risk goes up, and worst of all, we lose leverage, economically and politically. Our power relies on trust. Lose that and everything shifts. That's when the administration started sweating, not over the stock market, over the bond market. People like Scott Bessent and Howard Lutnick, serious players in global finance, started warning Trump. This could blow up the whole system. And to Trump's credit, and I don't say that lightly, he blinked. Not fully, but enough to roll things back. They issued a new executive order with exemptions for tech products. Smartphones, computers, chips, basically all the stuff companies like Apple were screaming about. And they rebranded the whole thing as a 90-day suspension as part of Trump's grand negotiating strategy. But that's spin. What really happened is they got smacked by reality and didn't want to admit it. Even now, there's still a 20% tariff on Chinese imports, double what most other countries are facing. So we're still in a tariff-heavy posture, just not full-blown chaos. Meanwhile, everyday people are feeling it too. Consumer confidence took a nosedive. People aren't just nervous, they're panicking, racing to buy phones, car seats, Christmas gifts before prices go up. This isn't abstract, it's panic. Let's not forget, Trump campaigned on lowering prices. That was the pitch, that he'd make life more affordable. But so far, Trump has jacked up prices with tariffs, and voters are noticing. People who were already struggling are now watching everything get more expensive. And they're mad, rightfully so. Now the administration is pretending this rollback was part of some master plan. It wasn't. What actually happened was, the markets panicked, major corporations revolted, donors got anxious, and the global financial system started to wobble. That's when Trump caved, not before. Now, will the markets bounce back? Probably, at least a little. Stocks usually rise when tariffs ease. But this kind of economic whiplash, jerking global markets around with sudden extreme policies, it kills confidence. And once countries start second-guessing whether the US is stable, that's a hard bell to unring. Right now, about a quarter of Chinese imports are exempt from the worst of it. That'll calm some nerves, but the damage to US credibility? That lingers. Bottom line, this wasn't strategy. It was a scramble. A scramble to undo a move with consequences they didn't fully understand. And the scariest part? We're still in the early days of Trump's second term. What happens next time they try something like this and it blows up even faster? We need less posturing and more reality, because the global economy doesn't care about branding, it cares about stability. And right now, we don't have it. Thank you for watching today's video. Like and subscribe if you're here for straightforward, no fluff political news coverage. I'm Addison Voss. See you in the next one.